Hello, this is Mike Swanson of WallStreetWindow.com. I've got a very special guest today. I'm speaking with Jordan Roy-Byrne, who runs the website, thedailygold.com. How you doing today, Jordan?
Hey, Mike. I'm great. It's great to be with you today.
Yeah, it's been a couple weeks since we talked, and it's been some interesting things happening in the gold market. The GDX went up to $26 approximately a month ago, dipped down to 22, went through its 50-day moving average, but then all of a sudden surged up, reached just about the $27 mark, while gold has gone up towards 1,300. And there's if you go on Kitco or a lot of the mining websites on the internet, there's all kinds of contradictory predictions. Martin Armstrong is saying gold's going to crash to 1,000, that the 1,300 level is holding as firm resistance, while other people are looking for gold to continue through 1,300 and just go up from then. So I'm curious what your thoughts are.
Well, let's start with the miners, because we know that the miners have put in a major bottom about 5 months ago, and the miners lead the metals. So I do think gold is ultimately going to break 1,300. But looking at the miners, Mike, you mentioned GDX. Now, GDX rallied up to about 27, where it peaked at the end of last week on Friday. And there's two reasons why I think we put in a short-term peak there. The first is GDX rallied up to basically the 2014 highs. There's kind of, I don't want to call it a double top, but twice in 2014 GDX peaked around 27. And so if you're looking at like a 2 or 3 year chart, the peaks at 27 really stand out as resistance. And also miners, they touched that peak. They were really overbought because, as you noted, they were correcting. They got down to 22, bounced a little bit around the 50-day moving average. And then we had news of the terrible employment report, and miners from the low a couple days before the report up until the high last week, GDX was up, I think, about 20% over that time.
Wow.
GDXJ about 25%, and that happened within over 2 weeks. And so GDX, it came to that 2014 resistance, very overbought, having popped up 20% in 2 weeks, and it formed a bearish reversal last week, and it was resistance, as I already said. So that's the reason why I think we are seeing a little bit of a correction here in the gold stocks. They've been down the last couple days. Looking at GDX, the support targets you want to look at are in the low 24s, and also that big gap, which is down to, we can call it 23, but it's the high 22s. So basically, I expect GDX will either put in its next low around 24 and it'll hold that gap, or it'll fill that gap down to the high 22s, and then that could be the next low. But generally speaking, over the next month or so, I do think miners are going to be in a kind of in a consolidation mode, maybe a lower to neutral. And because of that, I don't think we're going to see gold break 1,300 on this move. We were talking before we got on here, Mike, and you noted that over the last couple of days, gold has been up, but the miners have been weak. And we have not seen that happen for a really long time. The miners have been strong, and they've been leading the metals. And so given what I already discussed already, that's why I think we're going to see low, or I should say, I have a bias of lower to neutral over the next month or so. And given all those reasons, I don't expect gold to break above 1,300 on this move. I think it traded up to 1,290 today. I apologize, I don't know where it's at right now, but gold could rally up to that resistance of 1,300, but I don't expect it to break on this move. But given all those things, Mike, even though I sound cautious, bearish over the next month or so, I think after that period, then we are going to see a move that pushes miners to new highs, and we will see gold break above 1,300 at that point.
Yeah, that's kind of what I'm looking forward to. Yeah, funny thing is, I've been asking you about price targets. You can give me some price targets, but in the end, there's also a time factor in markets that really eludes people. And I would think that if gold pauses here or dips a little bit or whatnot, and then breaks out later on, then most people are just going to fall completely asleep, and then they'll be missing that move. And that's why I really want to keep talking about what's going on with gold to try to keep people awake with you.
Yeah, no, I completely agree. I mean, we're in a strong bull market here, especially in the miners, and there, when I've talked about this before, but when you come out of a really bad bear market, there's always the fear that every rally is going to be sold and we're going to get this huge sell-off again. And that's because the really bad bear market still lingers in your mind. And while at the same time you have the fact that the sector has been really strong. But if you look at how a market performs following a really bad bear market, once it gets out of that bear market, it really has a very, very strong move over the first year or so. So you really don't tend to get a huge retracement of the new bull market until you're in the second year. And so looking at where we are with miners, we're in the fifth month or so of this move. And just to go back to what I just said, I mean, as far as past historical bad bear markets, I mean, Mike, we know what happened after 2008 in the miners, and with gold. I mean, they had a really strong rebound initially. And if you look at the miners, they just kept rising for a while. They didn't really have any real major pullbacks along the way. I mean, they had quick 20% corrections, which 20% for miners, I mean, that's low. That's like 10% or less for the general stock market. And Mike, the low in March of 2009 for the stock market, I mean, that was the worst bear market we had since the 1930s. And what happened since that low? I mean, the stock market had a fantastic rebound, and it just kept going and going for, I think it was more than a year of a rally until the market actually corrected or retraced some of its gains. And the other example I'd use is tech stocks at the 2002 stock market bottom. I mean, they had a huge move after that low. I mean, tech stocks were doubling, tripling, quadrupling because they came out of course, a really bad crash. They were extremely oversold, and then the fundamentals turned bullish as the economy started a new expansion. So, I mean, to get back to where we are now, the miners have had a really, really strong move, but they're kind of overbought. I shouldn't say kind of overbought. They are very overbought, and I do think they're going to consolidate and correct in the weeks ahead. But I still think that moving forward over the next couple months, and once we get into the fall, at the end of summer, and towards the end of the year, I do expect miners, this performance that we've seen, I do expect that it will continue. And I don't think we have to worry about some major pullback or major counter trend move this year.
Well, before you go, let me ask you one quick thing about gold. I was seeing predictions this morning that the Fed could raise rates in September. Of course, about 3 months ago, they were predicting it would happen in June, and they said it would happen in July, but now they're saying it's going to happen in September. If that were to happen, do you think gold would crash?
No, I don't think it would crash. I mean, maybe it could coincide with a correction of some sort, because number one, the fundamental driver for gold is negative real interest rates or declining real interest rates. And so the Fed just hiking by 25 basis points, that really doesn't matter, because inflation has been stable to rising, and real interest rates have been declining. They've gone negative again. And so the Fed just hiking by a quarter point, that really doesn't change that fact. The fact that the fundamentals have turned in favor of precious metals. And if you look at the charts of bonds, or conversely, you look at the charts of interest rates, they look like they're at a real risk of falling apart this summer, and if not this summer, maybe in the fall. So, I mean, at this point, I'd be surprised if the Fed hiked. But remember, they hiked in December, and what happened? Gold bottomed in December. The miners, they had a false breakdown January 19th, which was the bottom, the bottom of the bear market, and obviously we've had a really strong run since then. So, yeah, if the Fed hikes in September, July, I mean, it doesn't really worry me. And Mike, I mean, if the miners consolidate for most of the summer, and the Fed does hike in September, I think you'd see the Fed, I think you'd see miners do really well on that news and after that news because, as I said, they're already over. I mean, they're overbought. They're more likely to consolidate and correct here for a good portion of the summer. And so, if the Fed hikes in September, that would kind of be pricing in, or the market now could be, potentially pricing that in if the Fed is going to move at some point. I mean, but as you know, Mike, I mean, the markets really lead news. And so what I'm trying to say is by the time the Fed actually hikes, if they do, that's probably the time you want to be a buyer.
Yeah, it makes a lot of sense there. Well, final one last question, and as you go, could you tell people to go to get more information from you and what they can get?
Sure, you can visit my website at thedailygold.com. All my work can be found there. I put out usually a video per week, a free article, a free editorial, usually Friday, and you can sign up for my free newsletter there. And by doing that, you get a copy of my book, which I wrote last year, called The Coming Renewal of Gold's Secular Bull Market. It turned out that was fortuitous timing right at the end of the bear market. Yeah, and you get a copy of that. It's over 100 pages of all the research and charts and everything that I've done over the last couple years. And every Sunday you get my free newsletter where I give samples of my premium work and talk about what I think is happening in the market.
Well, thanks for taking the time to talk to me and everyone else. We'll check back with you soon.
Thanks so much for having me, Mike.